If you have money in an old 401k, traditional IRA, or another retirement account, you may be able to move some or all of those funds into a Gold IRA without taking a taxable withdrawal. But the process has to be handled correctly. In this video, we'll walk through the Gold IRA rollover process step by step, including which retirement accounts may qualify, how to open the new account, how the money is transferred, how you purchase the metals, and where the gold is ultimately stored. We'll also explain the difference between a direct rollover and an indirect rollover, and the mistake that could leave you facing unnecessary taxes or penalties. Let's begin with the basics. A Gold IRA is a type of self-directed individual retirement account that can hold certain physical precious metals. Instead of being limited to conventional investments such as stocks, bonds, mutual funds, or exchange-traded funds. Depending on the account and the metals you select, a self-directed IRA may hold qualifying gold, silver, platinum, and palladium. The important distinction is that you are purchasing physical metals within a retirement account. You are not simply buying shares of a gold mining company or a gold ETF. The account is administered by a qualified custodian, and the physical metals are generally stored at an approved third-party depository. You do not personally take possession of the gold while it remains inside the IRA. Before we get into the rollover steps, we've linked to a free Gold IRA guide that explains how these accounts work, what fees to look for, common mistakes to avoid, and important questions to ask before choosing a precious metals company. You can get your free copy by scanning the QR code on the screen or clicking the link in the description below. There's no obligation, and the guide can help you become more familiar with the process before speaking with anyone about opening an account. Step 1. Determine if your account is eligible. The first step is determining whether your existing retirement funds can be moved into a self-directed Gold IRA. Common sources of rollover funds may include a 401k from a former employer, a traditional IRA, a 403b, a governmental 457b plan, a Thrift Savings Plan, or certain SEP and simple IRAs. Eligibility depends on the type of account, your employment status, and the rules of the current retirement plan. For example, funds held in a former employer's 401k can often be rolled into an IRA. However, moving money out of a current employer's plan may be more complicated. Some plans allow what is known as an in-service distribution, which may let an employee move eligible funds while still working for the company. Other plans do not. Before opening a Gold IRA, contact your plan administrator and ask whether your account is eligible for an outgoing rollover or distribution. Do not assume that every retirement account can be moved immediately. Step 2. Decide how much you want to roll over. A Gold IRA rollover does not necessarily require you to move your entire retirement account. Depending on the rules of your plan, you may be able to complete a partial rollover and leave the remaining balance where it is. That can be important because physical gold behaves differently from stocks and bonds. It does not pay interest or dividends, and its price can rise or fall. The appropriate allocation will depend on your retirement timeline, risk tolerance, financial circumstances, and overall investment strategy. Be cautious of anyone who automatically recommends moving your entire retirement account into precious metals without first considering your individual situation. A Gold IRA is generally presented as a diversification option, not as a guaranteed solution or a replacement for every other retirement asset. Step 3. Choose a self-directed IRA custodian. Once you know that your funds are eligible, the next step is opening a self-directed IRA with a custodian that permits physical precious metals. Most conventional brokerage IRAs are not structured to hold physical gold. That is why a specialized, self-directed IRA custodian is usually required. The custodian handles the administrative side of the account. This may include establishing the IRA, processing the rollover or transfer, maintaining account records, coordinating approved transactions, issuing required tax documents, and working with the metals dealer and depository. Before selecting a custodian or precious metals company, ask for a complete explanation of the costs. Those costs may include an account setup fee, an annual custodial or administration fee, storage fees, and the dealer spread between the purchase and resale prices of the metals. Do not focus only on whether a company advertises free fees. Ask what you will pay for the metals themselves and what the account could cost over several years. Step 4. Open and fund the Gold IRA. After selecting a custodian, you will complete the application to establish the new self-directed IRA. You will generally need to provide personal identification, beneficiary information, details about the retirement account you are moving, and instructions regarding how much you want to transfer. Once the account has been opened, the custodian can help provide the information required by your current plan administrator. Whenever possible, many retirement savers choose a direct rollover or trustee-to-trustee transfer. With a direct rollover, the money moves from the existing retirement plan directly to the new IRA custodian. In some cases, a check may be issued for the benefit of the new custodian rather than being made payable directly to you. Because you do not personally receive and control the money, this method generally reduces the risk of missing a deadline or accidentally creating a taxable distribution. The exact paperwork and processing time will vary by plan administrator and custodian. This brings us to one of the most important parts of the process, the difference between a direct or indirect rollover. With an indirect rollover, the retirement funds are distributed to you first. You are then responsible for depositing the eligible amount into another retirement account, generally within 60 days. That introduces additional complications. A distribution from an employer-sponsored plan paid directly to you may be subject to mandatory federal income tax withholding. To roll over the full account value, you may have to replace the withheld amount using other money and recover it later when filing your taxes. Missing the 60-day deadline could also cause the amount you failed to roll over to be treated as taxable income. An additional early distribution tax may apply when appropriate. For those reasons, beginners should be especially careful about having retirement money issued directly to them. The IRS's one rollover per year limitation generally applies to certain 60-day IRA to IRA rollovers. It does not generally apply in the same way to direct trustee-to-trustee IRA transfers or rollovers from an employer plan into an IRA. Whenever there is uncertainty, speak with a qualified tax professional before initiating the transaction. Step 5. Select the precious metals. Once the rollover funds arrive and clear in the new IRA, the next step is selecting the metals you want the account to purchase. You cannot place just any gold coin, rare coin, jewelry, or collectible into an IRA. Federal tax rules provide exceptions for certain coins and qualifying bullion, but the metals must meet specific requirements. Gold bullion must meet a minimum fineness of 99.5%, although certain specifically permitted coins, such as American Gold Eagles, are exceptions to that general purity standard. Silver, platinum, and palladium have their own eligibility requirements. Purchasing an ineligible collectible with IRA funds may be treated as a distribution, potentially creating taxes and penalties. Your custodian and precious metals dealer should confirm that the products being offered are eligible for an IRA. Still, ask for the exact name, weight, purity, price, and estimated resale value of each product before approving the purchase. You should also compare the dealer's selling price with the current market value of the metal. The difference is commonly called the spread, and it can have a significant effect on how much the investment must appreciate before you break even. Step 6. The metals are sent to a depository. After you authorize the purchase, the metals dealer arranges for the gold or other precious metals to be shipped to an approved depository. The metals do not come to your house. Taking personal possession of IRA-owned metals can create serious compliance problems and may cause the IRS to treat the transaction as a taxable distribution. Depending on the custodian and depository, you may be offered either segregated or non-segregated storage. With segregated storage, your metals are generally stored separately and specifically identified as belonging to your account. With non-segregated or commingled storage, your metals are stored with metals belonging to other account holders, although your ownership is still recorded by the custodian and depository. Segregated storage may cost more, so ask what each option includes before making a decision. Step 7. Monitor the account and plan for future distributions. Once the metals are inside the IRA, the account continues to operate under retirement account rules. The custodian will provide account statements and report required information to the IRS. You will also continue paying any applicable administration and storage fees. When you eventually take a distribution, you may be able to instruct the custodian to sell metals and distribute cash. Some custodians may also permit an in-kind distribution, where the physical metals are shipped to you. Either way, distributions from a traditional Gold IRA are generally subject to the same tax rules that apply to distributions from other traditional IRAs. Traditional IRAs may also be subject to required minimum distribution rules. Because physical metals are not as easily divided or sold as cash or publicly traded securities, future distribution planning should be part of your decision from the beginning. To recap, the Gold IRA rollover process generally involves 7 steps. First, confirm that your existing retirement account is eligible. Second, decide how much you want to move. Third, select a self-directed IRA custodian. Fourth, open the account and complete a direct rollover or transfer. Fifth, select qualifying precious metals. Sixth, have the metals delivered to an approved depository. And seventh, monitor the account, its fees, and your future distribution requirements. To learn more, scan the QR code on the screen or use the link in the description to get your free Gold IRA guide. It will walk you through the fundamentals, common mistakes, and questions you should ask before choosing a Gold IRA company. And remember, moving retirement funds is a major financial decision. Consider speaking with an independent financial advisor or tax professional who can evaluate how a rollover may affect your particular situation. If this video helped make the process easier to understand, please give it a like, subscribe to the channel, and check out our other videos covering Gold IRAs, precious metals, and retirement planning.